What's going on, guys, and welcome back to my YouTube channel. We're going to be going over why crypto startups are failing at a historic rate. So buckle up, it's going to get pretty bad. Cue the intro. Alright guys, so welcome. So we're going to be talking about why cryptocurrency is just not working out right now. What's going on here? So everybody thought, especially in the early 2017-2018 era, that by the time now in 2024, we'd be using literal cryptocurrency as our way of life right now. Replacing the US dollar, solving issues in like Latin America, Africa, and third world countries, but it's just not working out right now. So we're going to be going over why this is the case, because this is pretty bad. So first we're going to start right with the initial hype and why this isn't working out. Like I said, 2017, there was what's called an ICO, initial coin offering, right? And then tons of startups were launching that were using things like Bitcoin and Ethereum. And I'll go over what those two mean in just a second and why those are the only two ones that actually mean anything today. But people were getting in for the fear of missing out and what Bitcoin could literally have done for society, which led to a lot of things, right? Let's start with regulatory uncertainty. So unlike the stock market, cryptocurrency does not have a CAPM, capital asset pricing model, or index that you can literally bounce it off of. So this is where startups go into a little bit of a stranglehold, because a lot of people try and cheat the system. They do a lot of pump and dumps. I mean, I'll be honest though, I put a little bit into Dogecoin back in the day and I got about 14 grand out. Didn't know what I was doing, but with this one picture you can probably see what's wrong with that. And other nations reprimanded us for that, like China. That's probably why one of the biggest people in the economy don't want to use Bitcoin or Ethereum, but that's a whole different story. So coming from Saudi Arabia, right, which is the leader in cryptocurrency regulatory, the SEC and other models kind of modeled themselves afterwards, and there's been a huge crackdown on these cryptocurrency projects, right, from all over the world. And this has left a lot of people in legal limbo, struggling to raise funds, launch their product due to compliance issues, and so on and so forth. And this is a huge flag for an investor that doesn't want to invest in a heavily regulatory industry. In fact, since 2017, there's been over 24,000 projects, and 65% of those are either dead or failed. So next we're going to go over security concerns and fraud. So like I just said, there is not a good way to kind of, measure this stuff, and there's pretty insecure. One of the biggest cases, right, would be Sam Bankman-Fried in the scheme that we know as FTX, was tried to be the revolutionary cryptocurrency exchange that was possibly going to fix these things, right? So this failed because of lack of mismanagement, lack of liquidity, a large number of customer withdrawals, and Sam Bankman-Fried was charged and convicted for stealing customers' information. So at the grand scale, this failed in quite a big way. So now we're going to go to volatility and instability, right? So like I said before, right, there's only two main currencies that you need to be talking about: Bitcoin, Ethereum. And the concept of utility is where we get into trouble here. What can it actually be used for? Things like Dogecoin and Ripple have not been able to use for much, right? People just aren't buying into them. Bitcoin and Ethereum are staying afloat because they're the literal currencies that, run the marketplace. But because of their volatility, the price is going up and going down without any prediction or controlling the pump and dump scheme. It's so volatile that building a project with this is something that investors are literally not willing to invest in. So next we're going to be going over lack of adoption and scalability issues. So everybody thought that crypto was going to revolutionize third world countries as a form of currency. However, it's actually quite expensive and quite pricey in order to run cryptocurrency. And that's because of the way that it's set up. First of all, gas prices, right? There's a cost for every crypto transaction, and we may see that as a luxury here in the United States of America, or if you're in the West. But in places like Africa, Latin America, Southeast Asia, and emerging markets, where you can't really hardcore implement a cryptocurrency if the gas prices are too expensive for the people living in there, and they haven't had the infrastructure in order to run Bitcoin and Ethereum transactions. So yeah, and the last part we're going to go to is investor sentiment declining. And man, like the literal decline of investors from the post-COVID hype, right, of Bitcoin in 2021, where people thought that they're going to make a final push, is just going to be bad, right? So why is investor confidence down in cryptocurrency projects? Well, a lot of these projects fail like way early, and when it comes to venture capital, private equity, you're going to have confidence in an industry that's at least able able to go to a liquidity event 7-10 years down the line. And since it's so regulatory, like even the tax laws change for reportables on this, investors are starting to lose confidence, and in fact they're going to other parts of Web3, because the only bright spot in cryptocurrency is that the startups that do well in crypto have to attach themselves to other concepts of Web3 like blockchain and all these other things. So as with that being said, I wanted to keep this short and sweet, and this is why crypto is having kind of a downfall right now. I'll catch you on the next one. Have a good one, guys.